Welcome to Trading Nation. Ari Wald of Oppenheimer, Eddy Elfenbein of the Crossing Wall Street blog are your guests today. And Eddy, the topic is this. Really just three stocks have accounted for the majority of the Dow gains over the past years: Goldman Sachs, Caterpillar, and the third one, United Health. There we go. Is this sustainable? And would you still be a buyer of these names?
Not at all. I don't think it's sustainable.
Not at all to both? Because I asked two questions.
Neither of them are sustainable, and I wouldn't be buyers here. They've done very well recently, but that's really one-shot deals thanks to the Trump presidency. That's really not a repeatable event. Also, these are very small stocks relative to the entire Dow, based on their price weighting that gives them outside influence. So I'm not a buyer here. I don't think these are going to lift the Dow any higher.
Okay, Ari Wald, from a chart perspective, do the charts match up with Eddy's point of view that no, neither are sustainable?
Well, I think as far as the leadership, I do expect to rotate around, and I don't think it's necessarily going to be these three names, but I think the important point for us is that the overall market should continue to work higher, that as far as the participation, it hasn't just been these three stocks. It's been very broadly based. In fact, 77% of the Dow is currently in an uptrend, which we define above the 200-day moving average. And forgetting about my view, I'll let the numbers do the talking. We went back and looked at forward performance over the next 6 months. When you have at least 75% of the constituents in an uptrend, tends to be above average. Interesting, it also tends to be just as good when you're below 25%, when you're oversold. That the actual negative warning, the sell signals when you're in the middle readings, when you're making new highs, but only about 50% of the stocks are in an uptrend. We don't have that right now. So right now, historically speaking, the numbers argue for additional gains for the Dow Jones Industrial Average.
Okay, that's why you do it both ways. We got different points of view there, but Eddy and Ari, we appreciate both of yours. Thank you. For more Trading Nation, head to our website, tradingnation.cnbc.com.
There are several considerations to keep in mind when trading in the aftermarket sessions. First, there may be lower liquidity in the aftermarket than during the regular session. This can result in wider spreads between the bid and the ask, as well as clients getting partial executions or no executions at all.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.